China has a similar money problem as the United States, except they have it much worse. Let's talk about America's problem first. The American middle class is undeniably shrinking. Both sides of the aisle agree to this, and this article by Erica Barker can illustrate as to why. She is not only a military veteran, but she is also a data scientist, and she is on this app. Her reasoning for this is the same problem that China has in droves, and it's called a slowing velocity of money. It shows how many times money changes hands within the economy over a given period, like a quarter or a year. If you want the formula, you just divide the GDP by the total M2 money stock. And Barker gives a great description on how to think about the money supply, like our body circulatory system. When blood flows freely, every organ gets the oxygen it needs, but if circulation slows, extremities go numb, organs fail, and things start shutting down. Let's just take a look at the velocity of the US money supply. As you can see, it peaks around 1997, and since then, it drops from 2.2 all the way down to its lowest, which was about 1.1, and now we're close to 1.4. But take a look at this overall graph measured from 1959 to today. You could see in the 50s, 60s, and 70s, even the 80s, when things were a bit more stable and the middle class had a good quality of life, the velocity of money was pretty high, hovering at about 1.8. But since the late 90s to today, it has been dropping, and you know what else has been declining? American middle class income adjusted for inflation has dropped. It was at 56K in 1986, and now it's at 25,000. So more than half. Let's talk about wage stagnation. Now, I'm aware wages have been rising over the past few years to match inflation, but there's something you don't know. Worker productivity has jumped 70% since 1980. That is a lot higher than the average middle class income adjusted for inflation for the same time period. And remember, there's no adjusting for inflation with worker productivity. That is a solid good that can't be watered down. And I want to hammer this home. In 1986, like I mentioned before, the middle class income adjusted for inflation was 56K, and now it's 25K. Get ready to be a little upset. The pay for CEOs has exploded to 1,460% in the last 40 years. What are they doing that's making them 14.6 times more productive than the average worker? Aside from tax loopholes and tax cuts that give us huge deficits every single year, this CEO pay explosion is one of the biggest in-your-face demonstrations of how wealth is reconcentrating to the very top. What's the cause of this lowering velocity of money that's affecting America and even more China? Two reasons she points out that deserve a bit of attention are the death of pensions. You see, when people used to retire back in the day, they would get a stream of income every single week. But now, instead of pensions, people have a 401k, and it means a lot of their money that would have been potential income is parked in a bunch of other accounts. Then, of course, globalization and automation. A lot of manufacturing jobs were outsourced, but the key issue I want to focus on in her article is wealth concentration at the top. The rich don't spend money at the same rate as the middle class. That's right, we are much better spenders. Instead of circulating money through wages and consumption, it gets parked in stocks, real estate, and private equity, assets that don't generate the same economic activity. But we can't forget tax loopholes that have allowed corporations to offshore over $4 trillion into overseas accounts, and of course the $1.1 trillion that was saved for the top 1% and the corporations due to the tax cuts that took place in 2017. And if you look at the velocity of money around 2019-2020, this huge drop in the velocity was the parking of almost $1 trillion in buybacks, dividends, and a whole bunch of other financial gifts that were given to these corporations in the top 1%. Now, the good thing, there are solutions to America's problem. First and foremost, we need to tie the minimum wage to inflation like we did in 1950. When that happened, we doubled the minimum wage and forced it to match inflation for over 28 years, and that led to one of the greatest economic booms in America's history. We have to ensure that wages rise along with productivity. Close the corporate loopholes, obviously, and of course, raise the capital gains tax. And of course, reverse the corporate tax rate from 21% back to 35% as it was before 2017. And we should absolutely expand infrastructure projects that create middle-class jobs, but it also boosts our GDP growth. While the solutions for the United States are possible, they just require a lot of discipline, which Americans don't have, and of course, organization. But somewhere, somehow, it can be done. When it comes to China, I bet you they're going to need some outside assistance. China's velocity of money is significantly lower than the United States, and it likes to hover around 0.55 or 0.50, but it has been trending down to about 0.41. They have a growing middle class, they have growing wages, but they are still in the money velocity dumpster. China, just like the United States, is suffering a wealth inequality problem. While 10% of America's wealthiest hold about 72% of the wealth, the top 10% in China have 65%, so they're not far off. While China and America both have very high wealth concentrations at the top, China has something that sounds very good, but it's actually bad for the money supply, and that is a high savings rate. The United States averages between 6 to 8% of its total savings rate, but when 2021 hit and the great parking of money happened, you could see it skyrocketed all the way past 30%, and now it's at around 4%, so it's a low savings rate. Our savings rate is calculated by savings as a percentage of our income. Now, that 30% of the savings rate that America had a couple years ago is nothing compared to China's. Their savings rate is about 43% today. Now, it's great to be able to save money, but if too much of that money is parked and it doesn't start floating around the economy, you start to suffer negative economic consequences, like maybe, just maybe, deflation. And that's exactly what China is going through. Deflation sounds really nice. It means prices drop and the value of your money goes up, but it also means that people aren't consuming. When people start saving a lot of money because they assume that prices are going to drop tomorrow or in the next month, guess what? Prices are going to drop even further. People start losing their jobs and they watch their wages drop. While China is a very impressive economy and they have come a long way, there is a plethora of problems which I don't think they're going to be able to solve on their own. And most likely, if things do get really bad, they are going to start asking for outside assistance. Or maybe they're willing to come to the negotiating table with America in response to the tariffs. Because look, in 2018, we imposed tariffs on China, and look at the drop in their velocity of money. Now, no one can tell the future, anything can happen, but I highly suggest you read Erica Barker's article and give her a follow on TikTok because she is a walking encyclopedia of data science. I am the Geo Husar. Our problems are solvable, but they're not going to solve themselves. So let's get up and do something. Thanks for watching. If you find the post I just made useful, educational, informative, please feel free to subscribe to my YouTube, but the strongest form of support that you can give me would be signing up for my Patreon. Thanks.